Tony Saliba, welcome to my show. I'm really honored to talk to somebody who is regarded as a market wizard. You were featured, we all know, in that fantastic tome, Market Wizards by Jack Swager. And you've been in the business for quite a long time. You started out as an options trader. You've worked in the various markets, and you're a successful businessman. And you have a lot of interest, a lot of wide interests, but maybe we could just start at one of the big news stories at the moment, crypto. It's in the news. Sam Bankman-Fried, he was in court today. He was in shackles, led out of court. Quite a humiliating fall for that gentleman. And I won't pile on with all the grief, and the outrage, but I'd just like to get your take on it. What do you, did anybody see this coming?
Well, scam bankman fraud, as I have called him for quite a while, but they at least today they got him to get into a suit somehow,
Yeah,
for
right.
the first time. Um, this I can't say that I saw this coming, but I will say that in the summer when the Voyager and Three Arrows and Luna issues were all popping, and he and his FTX crew were coming to the rescue everywhere. They were always involved. They were always catching these falling knives. I kept saying to my team, that just can't continue. This is a bottomless pit. No serious trader would expose themselves that quickly. They would wait till the dust settles and pick up scraps if there were going to be any, right? Um, so, but there were like Terry Duffy from the CME. He called him out in the spring, and a couple other podcasters who interviewed him. One guy, I forget his name now, but he said, if I ask a guy how he made his money and he can't answer that question quickly, you've got to question him in his entirety. I totally subscribe to that. This is very unfortunate for a lot of unsuspecting customers in it. And the larger investors, the private equity and VC firms, I don't feel good for them either. But it's the little guy and gal who put their money in an account and it was stolen from them. That is just unbelievable. And this really doesn't have a lot to do with crypto, except that he did use his token to leverage, but this was fraud. I also say to my team, we were around heavily trading around the Enron time, John, and that fraud didn't cease trading in energy futures or energy contracts. The vehicle with Madoff was equities and options, and that didn't have a ripple effect in the trading of those asset classes. So this is really about fraud, corruption. Look deeply into the politicos, both sides. Taking big money going to Ukraine, the criminals in the Ukraine sending their money back to FTX, a huge money laundering swirl. I'm afraid that the American taxpayers end up holding some of the tab.
Yeah, it's truly extraordinary in its scale and scope. And you mentioned Bernie Madoff. He ran, from what we're told, and as it was accused of, and went to jail for it, of running a Ponzi scheme. And Sam Bankman-Fried has been accused essentially of running a Ponzi scheme, with losses estimated at 8 billion in or around. Investors who lost with Bernie, a lot of them got their money back. Now, they may not have been made whole, but they got a substantial portion back. And this was real money. This was
Yes.
real cash. What's your take on what may happen to investors and recovery in the case of FTX?
Right. Well. So I didn't realize this until when Freed kind of did his mea culpa the day after the election here in November, and I started digging into it. The Bernie Madoff investors, from what I understand, across the board were regained close to or slightly above 90% of their investment, because the bankruptcy court clawed back early withdrawals of profits, of winnings from some of the accounts. So So that happened, and that's a good thing for those Madoff investors. But with the FTX scandal, you have I heard this morning that it may be upwards near $1 billion was sent to the Democrat National Committee here in the U.S. That politicos, congressmen, and senators are saying, well, maybe we'll give it to charity. No, 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 no. You give it back to the people whose money it was. No, no virtue signaling about giving it to charity. That's not your money to give. It's those that belongs back to those accounts that were defrauded. So I think if there is a justice here in the United States, and I know he was multinational, they'll seek that out, claw that back. The investments that he's made, his parents' houses, the media that he bought off and advertised in, they can claw it back. They've done far more difficult things. The Justice Department, if they have the resolve.
It sounds like a lot of dirty money.
A lot of dirty money. And it has taken a toll. Before we started recording, you mentioned, how is this impacting the crypto market? It's taken its toll and across the board where people are a little more wary, pulling back. The volumes have dropped off. But for the most part, institutions are shaking this off. Maybe they've delayed by a quarter their expected deliveries. Most of the retail trading has subsided to a degree, as people don't want to get burned by the flame. But there was a Wall Street Journal story this week about basically a solution without a problem, or a currency without a need, or something in that vein. But there's still quite a bit of infrastructure being built out. I believe there'll be a pretty fair renaissance to all this, but just with a little bit more caution, or maybe a lot more caution, which we've always said. We come from traditional finance. We've never called these trading venues exchanges, because there needs to be a separation of functions. Why you would never trade stocks with an exchange that acts as your broker and your banker and your clearing agent. So in traditional finance, there's pretty bright lines. There's checks and balances where your money is flowing, and some of that should come to crypto. I don't think they should hit it with a sledgehammer, because there is a lot of good value, and I think Americans should be wary of that, because this is a alternative form of value that has for 13 years now. Next month will be 14 years. Has broad reach and broad usage.
So I hear you saying there should be more transparency in crypto, and there should be more outside entities which are not connected with an individual exchange in the crypto space. And these outside entities should be doing whatever clearing or administration or audit or custody, so that there's more investor protection.
Yes, absolutely. Well, in traditional finance, and I spent my entire life, adult life, registered, and still am registered in as a broker dealer. Although my crypto company is not, because it's a technology company and it's delivering services to institutions. We have FINRA and SEC and NFA and CFTC in the two securities and futures worlds, respectively. My issue with overregulation is if you're not solving for a problem, or de-risking, or helping eliminate the potential, or reduce the potential of non-trading risk. Everybody should know that they're taking trading risk when they make trades, but it's the theft or corruption or graft that needs to be wrung out of crypto. And I love it when people say, well, but crypto, isn't that where money laundering happens? Oh man, so you mean for 2 centuries with fiat currency. We never had money laundering. I mean, human trafficking was born on the backs of the greenback and the euro and the Deutschmark and the
Yeah.
lira and everything else. You know, believe me, we want to stamp all that out, but crypto can be audited. Okay,
Mm, mm.
so that blockchain capability is not something you get with fiat money. So I think regulation to make transparency, as you said, so that customers, like we're partnered with the exchange Gemini, and they have a web page that shows in just near real time their assets in and out, both fiat and digital, so that you can see that they're not leveraged. They have a proof of reserve right there. That's important. FDIC mandates that brokers that are carrying brokers, that actually hold funds and not just an executing broker or an introducing broker, has a margin level that's required. And I think that's should be the case with crypto exchanges. Okay. That's not a tough thing for anybody to agree to, but the transparency and the separation of duties.
Yeah. So you see a future for crypto?
Yes, I mean, I think that there's a lot here. There's a lot of different use cases, and the speed of money. I mean, you want to move your own capital from one point to another in the banking system. You have to make an appointment. It sometimes takes days unless you're, extremely well connected, and that's just not right. And I think, governments want to crack down on this to eliminate that freedom and prevent an individual from controlling their own wealth, whether it be small or large. I don't think is right, and I think crypto helps. I mean, we can transact in crypto on our smartphones, make purchases at ubiquitous um, um, establishments like a Starbucks or others. So it has a wide range of usage, but it also allows for the speed, the movement of money, the speed of money to happen instantly, which could be a bad thing if you're not careful,
Yeah.
but is a very good thing. Um, Mexico's largest revenue stream are remittances from the U.S.
Yeah.
Those fiats are going over, in wire transfers or in checking accounts, and crypto allows it to happen instantly and basically frictionless with Bitcoin and Ethereum ATMs.
Yeah, well, it's clearly not going away, but I mean, all the old arguments and what the critics say is it's volatile. Look at how it has crashed over the months. Um, is it a widely accepted medium of exchange? Can you pay your taxes in it? No, you can't pay your taxes in it. It's not really, backed by Uncle
Some
Sam.
states you can. Ohio is a state that I know of that I believe Ohio and a few others accept Bitcoin. And I would bet, John, that the IRS wouldn't turn down Bitcoin to pay
Well,
your tax.
that's the question. You see, local state taxes, yes,
Yeah.
you are correct on that. But can you pay Uncle Sam, your federal taxes? Will that day come? I mean, maybe the answer is yes, but it'll be at a set rate, or
Yeah.
there'll be some proviso there.
Right. Yeah, and I think there's exchange rates, uh I mean, I can't pay the IRS in euros, I mean, I
Mm,
had to exchange them. Um, I really think the technology aspect of cryptocurrency and the ability to monetize um, miniature activities. I mean, you can take Bitcoin out 8 decimal places, and it's just more modern, quite
mm, mm,
frankly. And
mm, mm.
but I don't want the greenback to go away. I don't think. I mean, there's a place for dollars, absolutely, and we should maintain it. The problem is the government always is devaluing our dollar, so um, you can't really offset that. You
Yeah.
don't have that choice.
Well, that's interesting you bring that up, and you're a trader and an investor and a businessman, and I hear that and I read about the dollar being devalued, and we could one day lose our position as the major reserve currency of the globe. Could you see that happening?
Well, the movement between China and Saudi Arabia, the petrodollars is, I think, are one of our biggest pillars, strongest pillars in as a reserve currency. Um, yeah, I'm afraid that could happen. I don't think it's imminent. I don't think it would happen, in the next 5 years or something like that. But things that you don't think will happen for a while, all of a sudden you wake up and go, they just did that. I
Yeah.
mean, oh my God. And
Yeah, it
then the
happens
next thing you
suddenly.
go, you're eating your words, right?
Yeah. Mhm. Yeah. And the consequences of that just could be so far reaching, it could drive America into poverty even.
Well, when we're sending $100 billion to a far off nation to protect their borders, when our people are already suffering with higher prices of food and other commodities and gasoline and other energy, and our borders are porous, we're living in bizarro world.
Yeah.
I mean, that hundred billion would take care of a lot of homeless people in this country, for instance.
Yeah, absolutely. Good point. Tell us about your early career and how you became an options trader, because it's one of those colorful, serendipitous moments. I'll let you tell it in your own words, but um,
I wish I could
it's
tell it in
quite
your
amazing.
words, Don. I love your accent.
Oh, you know where that comes from, and we could talk about your visits to the Emerald Isle, but maybe that'll be for later. But
Some of my most funnest times, yes. Um, well, I can't say I was born a poor child, although I was born on the wrong side of the tracks, and I lived in an enclave of tradesmen in one of the northern suburbs of Chicago. So by world standards, we were very well off, but by U.S. standards and definitely this Chicagoland area and suburb standards, we were right about on the poverty line or thereabouts. And my mom had 9 pregnancies in 11 years. I was born when she was just before her 19th birthday. My dad was a carpenter. And so I learned my mom would walk me around on a paper route at 5 years old, and I would hang those advertising mailers that they used to have with the little green rubber bands. Chicagoans and Americans would know what I'm talking about, and would put them on doorknobs a couple days a week, and I would get 50 cents for doing that. And my mom would put it in an Alka-Seltzer jar. It was a anti-acid tablet about the size of a quarter. And I started saving my money early, and I couldn't wait till I was 12 because I was then going to be old enough to caddy. Back then, child labor laws were, you couldn't really start working before you were 12. And I started caddying at a well-to-do North Shore Country Club, Northmore Country Club in Ravinia, which is where I grew up, is inside of Highland Park, suburb of Chicago. And most of the guys I caddied for were wealthy Jewish men that were either business owners or commodities traders or brokers. And I didn't know what this meant, but I spent so much time with these you know, men in their 30s, 40s, and 50s as a young boy, teenage guy. I learned a lot from them. I loved their style. I loved their lifestyle, and really kind of became my surrogate family. Spent a lot of time at the golf course caddying in the winter also. Um, so I went to school to be an accountant, got an accounting degree, didn't really like it, bored me a lot, and got a job as a stockbroker, assistant stockbroker during the Jimmy Carter years, John, the malaise of, on a big day, the New York Stock Exchange would touch 11 million shares. That was like a record back in
wow,
1977.
Jeez,
And
now
it would,
where it's at? Yeah.
we do that in the first millisecond, right? There's orders that big. So I was getting frustrated selling economic development bonds in Jimmy Carter Malay's uh, farmlands of Indiana. And I said, well, who makes all the money in this business? And they said the guys on the floor. And I was like, the floor? Then they go, yeah, either New York or Chicago. And then light went off. So I got in touch with a series of weird events, just kismet. Got back in touch with some people back in Chicago. I actually got a job as a clerk on the floor, and I met one of the guys that I caddied for who had sold a women's haberdashery and was just dabbling on the floor. This is back in 78. Options weren't even 5 years old yet. And there were a lot of speculators down there just selling premium or punting, right?
Yeah.
And I had learned in a couple months of clerking how to put on some spreads. I convinced Julian Good, rest his soul, who I caddied for, one of the men at that club. I convinced him to let me try putting on a spread. I put it on. It worked. Came back a few days later and said, "Okay, Mr. Good, we could take this off." He risked about $1,500, and we did more than double that. I forgot exactly how much we made in those few days. And he said, "Oh my God, could you do this again?" And I said, "There's my opening. I can, but you got to get me on a seat." And he was the first guy to back me. Or the only guy to back me. I didn't have, as the book Jack's book Market Wizards depicts. I really had a rough go in the beginning. Learned some great lessons about despair and discipline, and the combination of your emotions and really trying to stay within the stripes or the lines of the pitch, so to speak. And I steeled myself away to studying every night theoretical values. This was before computers. I mean, there were mainframes, of course, but before personal computers.
Yeah.
And I would get a printout out of the mainframe of theoretical values. I traded a very volatile stock named Teledyne. It was kind of what a lot of your viewers probably won't know is that before 1981 or 82, there wasn't any indexes. There weren't any equity indices to benchmark the health of a sector or the market overall. So investors made up their own baskets, and they used certain industrial high flyers as surrogates to the marketplace. IBM, Honeywell, Texas Instruments, Polaroid, Kodak, and Teledyne. Teledyne was a conglomerate. That stock I traded was super illiquid. And when the market was going to turn and the Wall Street brokers were all talking to each other and they needed to start getting long, for instance, option orders would flood in onto the floor from all over and in to buy calls in these names and a handful of other Superior Oil and some other mini mining, 3M, Minnesota Mining and Minerals, or whatever, 3M, and Teledyne. So the stock was very volatile, and that's where I was hanging out as a clerk for the guy I worked for. And when Julian backed me, I jumped in head first, and then within 2 months had my head handed to me, literally almost checked out. I lost most of the money that he grub staked me with, and it was actually 44 years ago this May. Delta Airlines crashed on takeoff at O'Hare, and some 500 people died on that plane. And back in the day, there used to be a late edition newspaper. It came out after the close of the market, like within an hour after the close, and it would have all of the closing prices of the top stocks for the day. And that's how we knew how the market did if you didn't call your broker, because there was no CNBC or anything like that yet, right? So I'm walking, after trading, I stayed and did some of my homework. I had this terrible day, and I'm walking downstairs with one of my colleagues to the lobby of the Board of Trade building, and they had a cigarette and candy counter there where they had the late edition. And so I picked it up to get all the closing prices. And the headlines on the late edition, John, were this Delta Airlines flight, whatever, had just crashed. And it had a picture of the broken fuselage. And it said, 535 people died. And I looked to my colleague and I said, the way I feel right now, I would trade places with any one of those people.
No.
That's how bad I felt, having disappointed Julian, lost all this money. Now, my trading problem was I traded too big. I bought too much premium, and it was the Memorial Day weekend, and they took the air out of the premium. They knocked the volatilities down, and boom, my position got marked to market, and I lost the majority of my trading account.
Wow.
So that was a big lesson for me.
And then presumably, and you obviously did recover from that, and you went on to prosper.
Mm-hmm. Yes, I still had about $15,000 in my account, which in 1978 was, but it was 1979. That was still a decent amount of money, and maybe like $50,000 or $75,000 today. So it wasn't like I was out of bullets or out of opportunities, but I had to really hunker down and guard my shekels, so to
Yeah.
speak, right, and protect myself going forward. So I started, and I've been doing this all my life, enlisting people who I trusted as sounding boards and asking them questions and getting feedback. I mean, I didn't want to be a nuisance, but I did impose myself on other traders who had been down there for a little while, and just trying to triangulate on, what's the key to their longevity or their stability, so to speak. And I learned there's a wide range of answers there. Okay. There are those that have a really fast twitch capability and they would scalp, and there were those who would plan out over months, and there were tape readers, and there were chartists and point and figure people. And I found a group of guys that were time spreaders, meaning they would just trade the front month to the next month and keep that relationship intact and trade the order flow that would come in two different options or four different options. Very disciplined, very regimented, almost like therapy.
Yeah.
I left Teledyne, which was crazy, moving 5, 10, 15 points a day back and forth, to go and trade in Boeing, which only traded maybe a half to $1.50 range a day. Still, you can make money in options, but you didn't have this big risk. And I got it out of my system.
Yeah. So, you went through the booms and the busts and the booms again. You saw crashes and flash crashes and so on. And you mentioned that disaster day that you would trade in places with those unfortunate people who lost their lives in that terrible plane crash. So, was there a high rate of attrition at the CBOE, that people lost it all?
That's a great question. Right before I started, April of 1978, your viewers should look it up, right? We crashed up, okay? The market, there was a short squeeze, and the market couldn't open on Friday of expiration that April. Back then, we only had expirations every quarter, okay? So there was less liquidity and more open interest for each of these expirations. I mean, IBM opened on Monday morning, so there was this major short squeeze of um, public interest in calls that the professionals hadn't bought back, and now they were stuck trying to buy stock against their expiring calls that were out of the money on Thursday and in the money on Friday. Okay. And I
Yep.
give you that as background to your question. For about 3 years, when somebody would say, "What happened to Tony Saliba?" or "What happened to Jack Brown?" they would say, "He went out in April." And even though 3 Aprils had passed since, we knew what they were talking about. It was a bloodbath. So many, the attrition was like maybe 30% of the traders. So I traded on the floor for about 15 years, and I'm a numbers guy, and I did groupings of all sorts of data. And we had about 1,000 members on the floor and about 2,000 support people. Okay. And members could be market makers or brokers. Okay. And I would say in April of 78, probably 250 to 300 guys, got the axe. They blew out. Maybe some of them got recapitalized and came back. Some were driving cabs, okay, taxi
Wow.
cabs. So
High risk,
high
high
rate of turnover.
stakes, and
Yeah,
high pressure. Trading has changed a lot since then, Tony. On in options in the equity markets, the Florida, New York Stock Exchange is a shadow of its former self, even though it exists. It's all gone high tech. It's all gone electronic. There's maybe dozens on the floor. I don't know what the number are at the New York Stock Exchange.
right.
CBOE probably the same. Everything's all computers,
Yes,
advanced
yes.
computers and algorithms.
Big capital, big combines. So another metric that we kept track of, I kept track of for a long time, was the number of registered liquidity providers. So I traded on the floor till 91. My brother took over. We had a DPM, a designated primary market maker operation. There were about 70 of them at the CBOE that were responsible for the fairness and orderliness of the pit for that underlying, and we kept that another 10 years. I kept track of the liquidity providers, the LPOs, liquidity providing organizations, and they ranged from sole props, young men and women who were just grub stake, doing it like I did it back in the 70s, all the way up to the big boys that were enterprises that had maybe even multinational reach, but definitely were on each of the exchanges in the US. And the number, just to give you an idea, the number of LPOs before the 2008 financial crisis was about 180 firms that were individuals, firms, or whatever, which was down from about 500 at the turn of the century, because this is a rich tapestry of liquidity provision in the US, where we all have different market timing and risk reward profiles and interests in how we're trading and what style of trading that we're doing. So it all came to the forefront on the screen with really tight markets. But then electronic trading started to creep in. People started going upstairs. Liquidity started, drying out. So markets were getting a little wider and thinner. And these big companies like Citadel and Susquehanna and Citibank packed it up a couple years ago, but Simplex and Wolverine. There's about a dozen, not to leave out IMC or Optiver, all great, filled with great men and women and great companies,
Yep.
but heavy in computer power and heavy in capital and heavy in quantitative analysis and algorithms, as opposed to you and I there
Yeah.
stretching it out, even on our personal computer, getting buffeted. Now, the the number of liquidity providers that are listed are in the dozens now. They're down maybe under 30 total in the US to maintain that. Conversely, though, I will say technology has benefited the customer. One last little vignette about the recent past. In '03, there was a big debate in the options industry about payment for order flow.
Yeah.
Equities had been doing payment for order flow for a long time. And I was completely against payment for order flow in the options market unless that payment could make its way somehow to the customer, because it's the customer's order, right?
Yeah.
So the way that has occurred is by the brokers reducing or eliminating commissions, okay, and a tighter bid ask in options than ever before. Things that we never could provide in open outcry on the floor, where you had 1, 2, or 3 tick wide markets for the most part in a lot of the more active stocks. So technology's definitely benefited the retail investor and the big combines at the cost of the middle guys, the mid-size
Yeah.
prop traders.
Yeah, yeah, you know, it's a massive change, revolutionary in that sense. You just look at how Nasdaq changed over the years when they introduced all the regulation, order handling rules, and all the market makers, the human market makers, lost their jobs, and then the machines took over. Crypto, in a sense, is a product or an evolution or a consequence, maybe, of all this technology, right? I mean,
Yes.
big machine power to drive it. I mean, you couldn't have done it back in the day, crypto,
Right.
because it would be inconsistent with that form
Right.
type of marketplace.
Well, it's a very regimented, democratized accounting process where anonymous miners, computer operators from anywhere in the world, sort of guess through algorithmic attempts at solving a string of value to verify a transaction. And that can happen, in some number of moments. Used to be many minutes. Now it's condensed, and they're rewarded for doing that. But it's very open and democratized form of accountancy or of verification of that trade. Then it's before it's put on the blockchain, and that is that is a way that you have an immutable ledger of these transactions that you can go back and look at and verify what the wallet is. You may not know who owns the wallet, but law enforcement could find that out if they needed to, I
Yep.
imagine. So it's an outcropping of supercomputers and the ability to do this work, but it's also an ingenious idea that some people are trying to do this, fully with securities, fully with real estate, fully with art, anything that is of value that you want to keep an audit trail of.
Yeah, and the blockchain is the underlying technology in
Yes.
many cases. Um, your business interests are wide and varied and really interesting, because you referred to my accent, I guess, earlier, being from Ireland, but I'm living here in New York, New Jersey. And so that's dear to both our hearts, because you have a big investment, if you could tell us, over in the Emerald Isle. And it plays to your passions in golf.
Yes. Well, that's right. So earlier we talked about my first real big job as a caddy, and people ask me to play golf all the time, and my standard answer is, "Oh, I'm sorry, I respect the game too much," because I play military golf, John. Right, left, right, left. So I caddied for many years, about 14 years. And I sat down one day when I was living in Stockholm and calculated how many trips around the track I had done as a caddy. And I was that kid who never wanted to go home. I was there first crack of dawn, and the last loop out, I was begging for it. Some days I would, you know, many days 36. Some days I would go 45 holes, and I caddied on Christmas and New Year's because the Roaring Twenties, the guys that we caddied for, would go out and try to play at least 3 holes with an orange ball. And so that is my passion. I'm a director of Western Golf Association, heavily involved in the Evans a Scholarship Foundation, and also my family office owns part of a insurance company. And after the '08 financial crisis, as you know, being Irish, that in the UK and thereabouts, they call bankruptcy administration, right? So there was a property that went into administration, and at the time, the oh my God, what is it? The 10 most the largest countries, what's the letter before the C10, or no, what is it? The
B10.
the economic countries that, well, they threw Russia out, but anyways, they were all meeting. They agreed to meet at a brand new golf course called Loch Earn, and it's properly in Northern Ireland, so it's a UK property, and it's on the Northern Ireland border, and all of our staff is from Enniskillen in the Fermanagh area, county. So our staff is all Irish men and women. Our chef is Irish. He locally sources everything. And this economic summit was planned for 2011 or 2012, but with the financial crisis, the grocer who bought all this property and borrowed a big chunk of money from the banks filed for administration and had to give up the property. But the UK government did not want to disappoint the economic summit, so they kept it going through the summit. And when we bought it for pennies on the dollar, and I went to visit the first time, there are pictures all over the hotel and the clubhouse and the restaurant of the property of Obama, and this before they kicked Putin out of it. G10, it was a G11. That's what it was.
Okay.
Yeah. Now it's like the G8 or G9, but and Angela Merkel and all the heads of state, because we held it there. It's got a helipad, it's gorgeous. We brought in new management, filled up the hotel, put on programs for destination. It's just beautiful, beautiful country. My family and I have visited a number of times. The Irish people are so lovely, and the Northern Irish people, are lovely too. It's just a real dichotomy. I think there's a saying that you probably have heard out of Belfast that is, the road from Belfast to Dublin is much shorter than the road from Dublin to Belfast, because people go visit Dublin all the time.
Yeah.
But hardly anybody from Dublin is visiting Belfast.
Well, they got to go up and visit that golf course and play it some rounds.
Loch Earn, it's gorgeous. Look it up online. I just can't say enough for the staff and the wonderful people there, and it's a lovely, we went to look for the Loch Ness monster and everything. It's just gorgeous. It's God's country, John. Yes.
Yeah, it certainly is. It certainly is, and I can see why you're passionate about golf even more since you
Yeah.
bought that beautiful property, and I'm sure you're taking great and loving care of it. How do you see the markets in the year ahead?
Well, so I think we have some turning points here regarding like this, ridiculous budget that just was uh, passed here
Mm.
and the continued, bastardization of our currency. But, I think the Fed has, they have this desire to make sure things don't go completely off the rails. I'm bearish personally in the U.S. stock market, but I know there's a lot of money pent up funds to be committed. And somebody showed me a chart yesterday of where we are from the top compared to '08, and we've got a long way to go if we're going to
Yeah.
emulate '08. But I just don't think people want to suffer that much pain, and thus you have buying at every dip. Look at the VIX. It can't get up off its butt.
Yeah.
It hangs around in the low 20s. So there's not very much fear in the marketplace. I tend to think we're going to have a continued choppy market with early part of the year probably trending lower and a change mid-year to close it out higher. If I had a gun to my head.
So, are we going to have a recession next year? Are we going to have a soft landing? Where do you see it?
Well, we're technically in a recession. I just hate the way people, want to change the meaning of things. Okay, we've had two consecutive quarters of contraction, and now they want to say, well, I mean, they did this with the consumer goods ratings in terms of inflation and dropout. The core rate versus the overall rate, and we're technically in a recession, but I just don't think it's bad enough for people right now. They want to make it worse. I personally think we can solve everything here by unlocking the rich energy resources we have in this country and then get to work on clean nuclear and within a decade have everything under control. But in the short term, fossil fuels are the way to go. You can't fly a plane on windmill power or solar energy. So people have to figure out that this is going to take longer than they want it to and should be done right. Soft landing, probably maybe funding from the government, maybe more forms of UBI like we had with the PPP.
Yeah, but you sound quite optimistic and certainly bullish about the future of America, leaving
Yes, I am.
aside fears about the dollar and all kinds of weird
Yes.
stuff that's going on out there, and maybe energy independence will come about at some point.
Well, I think America is the greatest experiment in human history. We, as Reagan said, we're always at risk of losing our freedoms here within a generation. Um, but I think generally the fabric of the country is strong, and I defy anyone to show another process, another economic format beyond other than capitalism that has raised as many people out of poverty globally, over the last 100 years. Okay. And, mostly in this country, but it has a ripple effect and it spreads. So I'm generally bullish on the country. I'm generally bullish on our way of commerce. And I think there's a lot of innovation. I think what we just went through with these crypto debacles, which the earlier ones were over leverage, which the lending rates were out of control without any safeguards, a bunch of oops, and then this fraud with as I call them, scam bankman fraud. I think, that'll build a base and also see higher highs too. So yeah, I'm bullish over the midterm.
Tony Saliba, thank you.
John, thank you so much. It was really an honor and a privilege.